何を見ている？そこだ。何？
I'm from the MicroStrategy Alchemy department. We brought you STRF, STRC, STRK, STRE, and STRD. Today we present STRU, the first preferred stock engineered through the magic of Bitcoin, to always go up. How do we do it? It's just math. Every time someone buys a share of STRU, a short position is opened in MSTR common stock. This guarantees the price of STRU will always be up only. Welcome to the alchemy.
What's up, folks? Happy Friday. Hope you had a good one, and hope it gets a little bit better. Not much has really happened in the last 2 weeks, has it? I'm not really sure what I'm going to talk about today. I guess we'll talk about MicroStrategy and Bitcoin and their products, and also a little bit what's going on with SpaceX, as well as everything else with the general market, which is still bullish. But yeah, as always, if you've got other symbols to look at, make sure you put them in the chat. But yeah, I'm being a little facetious. Look, I want to be very clear. Like, this is not me victory lapping. Okay, I have spent the last 2 years now trying to warn people against this losing money. And I've been told that I'm bad at math. I've been told that I didn't understand the product, that I didn't get Bitcoin, that I just need to read a book. But I didn't need to do any of those things. Okay. I didn't just get lucky. I watched the behavior of the principles of MicroStrategy. I watched the sentiment of the market and all of the participants, all the people on Twitter. And yeah, it's not really real life, but it gives you a pretty good gauge of what's going on. And I knew with absolute confidence all the way back, well, I was very early, before even November 2024, that this was going to blow up. It's not about the math. It's never been about the math. It's always about what people were willing to pay for something, sentiment, always. And it always will be. And what's interesting is that over the course of, this week, all of the folks on, all the principles on, let me find it in my list here. One second. There we go. I would not want to be in the room or in the office of MicroStrategy this week. But I mean, tell me without telling me that you all had a social media ban all week long until you sat down and you said, everyone come up with your most positive, uplifting, confident post that you can make going into this weekend on Friday, and make it. And you know what? Another thing I've said, confidence is silent. Okay. Now, granted, they can't just be silent. Not with the social media profile they kept for all these months, driving these products up. But at the same time, think about the people that are very confident, they're financially secure, that they aren't required to make these kind of statements. Or here's another example. Stanley Druckenmiller, who's well known as a very legendary investor and everything like that. I remember listening to a recent interview that he did where he talked about in his history, in these positions he'd be in, $100 million positions back when that was real money. And he would have to, in the day, go and throw up. That they are puking their guts out over there. And to present themselves as not doing that, I guess that's what they're supposed to do. But the whole time that they've been projecting this aura of confidence, as a trader myself, I just know it's not real. Like, a real trader fears risk. And my crusade against them has been this whole presentation of it being uh, pr- uh, a risk-free prospect. What they're offering people, there's no downside. And to those that say that that's what old Sailor never said,
Right? I mean, that's the engineering. I give you the upside, you have no downside, and I pay you a dividend while you wait to get rich.
there are some law firms now that are looking to sue him. Um, I mean, that was it's been inevitable this whole time. The only thing that's kind of stalled this is the fact that if someone calls BS, they lose the whole strategy, which is to make number go up. But it's been a toxic effect on Bitcoin. Absolutely. And this is not just fudding at a bottom. And I'm fully cognizant. See, that's the thing. I'll actually hedge. And I'll say things could turn around. Now, did anyone think that at the top things could go down? No. But I'm willing to say here at the bottom things could turn around. In fact, I've got a bull case, actually, which there's a dark demon on my shoulder of opportunity that despite all my warnings, despite all my protestations, despite everything I hate about this company and the way that they manipulate and lie and misrepresent, there's actually a bull case to be made in one of their products, STRK. So I want to talk about that and explain why that is the actual potential asymmetric bet right here. If you wanted to ignore me, if you wanted to think I was wrong, that I was bad at math, that I was just lucky to be against all these products for so many years, or if you want to say, hey, wait a minute, you're able to identify or maybe discount what is not opportunity, then listen when I explain this. In other words, if you must touch a MicroStrategy product because you just can't stay away, because you just absolutely have to, it's been a generational buying opportunity every day this week, I've been told. And by the way, if you're on Twitter and you're thinking, oh, well, the sentiment has turned bearish, trust me. I have on good authority, there are a lot of people that are going to be bullish to this thing down to zero. They will be $1 will be a generation opportunity above all other else. And then they'll start talking in the pennies. I promise you, there are going to be people that write this all the way down. If it doesn't come back, that's the enigmatic beauty of it, is it could actually turn around. I'm willing to acknowledge that. It could happen now. It definitely wasn't going to happen as people thought it was going to, where it was just going to be up forever, Laura. I knew that for a fact. And that's just by the way they presented themselves. So let me get chat out here so I don't miss anything you guys say. All right. All right. What else we got on here? Another thing I thought that was interesting, let's see, let me go back to my bookmarks. There was an article here, by Quoth the Raven. Now, I find Peter Schiff is a funny guy. I like him. I'm not a big gold bug, but he's kind of like the Alex Jones when in this sector, isn't he? Where he has been saying that Bitcoin's going to fail for over a decade, and it hasn't. So people are like, "Oh, you're wrong all the time." But in this case, he is right. And specifically, a tweet that he made this week about the culpability of CNBC and financial media for um, giving so much coverage when they were hyping these products, and absolutely no coverage now as they are failing. It's like the reason I make a big deal about it is because I want people to learn lessons. I want people to not lose money. I want people not to get caught up in this. It's a play on people's emotions. The whole you're meant to live a comfortable life. No, you get paid to take risk. It's supposed to feel uncomfortable when you put on position. There's never been a position that I've made money on where putting it on didn't feel uncomfortable. If it feels comfortable because you're reading it on social media, where you have absolute rock solid confidence, something's wrong. Really, it is. I mean, you can be confident about it. You can say, okay, this is a good bet, but you need to have at least a little bit of discomfort. And where that comes from is when you're buying something, when it's down, when at least some people are telling you that you're wrong, because that means that the price is at a discount. If people are telling you they're wrong, if you go out looking for people to tell you that this investment is correct before you buy it, you're buying the high, flat out, absolutely every time. If you can't find somebody to tell you that the trade is wrong, with the exception of myself, of course, when I'm telling you that MicroStrategy was wrong back 2 years ago. If you can't find somebody that will give you, if you can't find a preponderance of people, how about that will tell you that it's wrong, then you're not making a good trade. You're not making a good investment. I mean, we're going to talk about SpaceX here in a little bit. There's some interesting things going there, but you know, everybody's just all this on this just math stuff. I wonder if we can actually put this to bed. I wonder if we can actually put this just math stuff to bed, because I don't think that you can math. I mean, economics is kind of a quasi science. Instead of telling people what I do as a trader, because they immediately assume, oh, who are you betraying? I just say I'm an economist because, ooh, it sounds smart, but it doesn't require any actual applicable knowledge, in my opinion. All right. So, what is the bull case? Let me be contrary to myself now. STRK. Believe it or not, out of all of these financial products, I am forced to admit that if you absolutely have to do something, their STRK offering is the one that actually has the asymmetric upside. And here's why. First of all, it's down a lot. Why is it down a lot? Well, that's because broadly every dividend yielding instrument, not just MicroStrategies, but also SATA. I just checked this today because SATA was holding its peg at 13 pretty well, and it has kind of absolutely gotten annihilated as well. Just to be really clear and kind of put a bow on it, Stretch, their STRC, their iPhone moment, this product is functionally dead. It's dead because it was sold as zero volatility or 1 penny volatility, however you marketed it, low risk, high Sharpe ratio. You know, the other common meme is zoom out, bro. You could have seen going into this that this thing was not zero volatility, but up until this point, that's what they were advertising it as, because people don't have TradingView or they can't pull it up on Yahoo Finance and see. But this product is functionally dead because it was sold as the way of stripping out the volatility. That is a quote. And people are going to remember. No one's going to buy this piece of toxic garbage. That doesn't mean that there's not an opportunity to be had in what's actually, ironically, their lowest dividend. Now, here's the deal with this. All right, so this is STRK. Everyone now, well, less as the week went on, more at the beginning of the week. At the beginning of the week, we were still in this like, Mark, someone last week linked me a video to Mark Moss, who was telling everyone 6 months ago to get into STRC, who's now coping hard to his hundreds of thousands of followers, that things will be fine. It's just math. As soon as the price drops, that means that investors will rush in for the effective yield. That video came out, I believe, last Friday, and that was this Thursday. So it was still in the high 80s. It closed. Yeah, they didn't quite rush in, did they? Okay, so stop listening to that guy. But what you can look at is now the effective. Now it's popped up a little bit, but yesterday when I was looking at this, doing the research, it was popped up to about 14, or excuse me, it was over 15% yesterday. Now, why I became attracted to this, and I hate to say it. I hate that I'm looking at this as opportunity. But with the FUD state, with all the, with the fact that I'm basically saying I was right now. The fact that people were dogpiling on this, it is at a point of high emotion to the other side. That does create opportunities for a bounce back. And in every bubble pop scenario, which is what MicroStrategy is, I mean, we've gone over this on many live streams before. It has followed the perfect pattern of a bubble. You have the euphoria, the new paradigm, in other words, the infinite money glitch, the return to normal, things will be okay, to the despair and anxiety, and now you have the fight. You're getting into the phase of capitulation, anger, and I think the anger phase is actually starting to pile on. Here, for those that haven't seen it, of course, let's just show it. Cheat sheet. of a bubble. So I can't deny that as I relied on this model of a bubble to foresee that it was a euphoria to complacency to anxiety to denial to panic, that we will eventually get into the anger and depression phase. And the sentiment seems to be shifting to that. And so, yeah, I mean, you have that little pop up right here. Look, it's calling it perfectly. Euphoria to the complacency, you have the anxiety, the denial, a little bit of panic is coming in and capitulation. You have that little pop up there before finally now we are in the anger phase. Okay. Doesn't mean it's going to fully recover, but in these kind of bubble scenarios, you generally have some kind of a rally. The emotions don't last forever. And because there's so much volatility, it's going to snap back up. So at some point, like there's no shorting up right here, by the way, there's no short opportunity. There may be, but the problem is if you try to do with options, you're going to get killed with theta because you're just going to have a slow bleed. And then at some point, you're going to have some kind of a rally. Everyone's going to be like, see, our faith was tested and we are correct. And that's going to be people's opportunity to get out. The whole I want to get out of break even thing. Will people take it? I don't know. Probably not. Usually not. But why I'm bringing that up is because if and when that does happen, STRK is a convertible preferred. That means that the shares of STRK convert into shares of MicroStrategy common stock. Now, the conversion rate is 1 to 10, 10 to 1, whatever means that it only converts at $1,000 a share. And of course, MicroStrategy is at 85 today. So it's way out of the money. So it's not going to convert, but it has exposure to MicroStrategy price. And that's why if you zoom out, bro, and look at STRK, back when things were doing hunky-dory, people were paying extra. In other words, the par value of 100, it was paying well above that when in July of last year, the summer of last year, it was actually trading above 100 all the way up to 129 because it has that convertible option. So if MicroStrategy stock does well, this thing is going to yeet. It will. And you're getting paid from this point around 15% to hold it. Now, what is the risk? The risk is MicroStrategy goes down. The risk is this FUD continues. But from where I sit, I hate to admit it, the fact that this has unlimited upside. See, a lot of people were trying to buy STRC in this dip because they rationalized, okay, I know the math and I'm going to get paid this effective higher yield and I'm going to get a capital gain when it gets back to 100, presuming it was. It may, but it's getting pretty far away now. And the people that took that trade are now hurting. But that was not a good trade to begin with. Not because the logic of, oh, it will go back up is wrong, or, oh, I'm going to get paid wrong. You had a fixed upside. You had a fixed dividend, and you had a fixed upside to 100. So that's what makes it not a great trade. Whereas in this case, you actually have unlimited upside, theoretically. I mean, if you're really bullish, if you really think they're going to survive, if you really think that they're going to actually make it, if you think there's just going to be a pop, because a pop in the MicroStrategy stock, because this is related to the MicroStrategy stock, it's also going to pop here. This is where the asymmetric opportunity upside is, actually. And I hate to admit it, but just in the interest of being fair and really looking for opportunity, this is a opportunity. I wouldn't say it's one that I want. I just look, if I'm going to be honest, if I'm going to be a real trader, I need to be a mercenary. So the problem with, and I've discussed this with friends that have been bullish, the problem I've had with this whole thing is that I have been passionately against someone that I believe is scamming people. I've taken a moral stand to it. And it's kind of like, betting on airline stocks right before 9/11. I mean, you can't control it. You're not responsible for it, but are you going to make money off of it? Well, you can choose to or not to. But if one absolutely had to play with this stuff, this would be a This will be it. So that's just the honest interpretation of that. All right. Now, what is going on though with the common stock itself? It's in free fall. I mean, it had a chance to hold a major low. Like I said, the anatomy of the bubble model is more applicable here. You're going to get some kind of a pop up, just like you did over these last few months from April into May. There will be that kind of volatility in here. You just don't know when, but there's just going to be a slow grind down. It's going to be a slow. That's the worst thing that can happen. People think going lower is bad. It's really the slow grind because you bleed everybody. You bleed out the emotion, both the bullish and the bearish. You bleed out all the theta from the people who are trying to trade the options, and you bore the hell out of people. And then at the boring point, that's when you actually should be a contrarian and be paying attention, because then you'll actually get some kind of pop, but you don't know when that's going to be. It could be a week, it could be a month, it could be a year, it could be years. And of course, that's the game that the just math people are playing right now. Oh, they can last forever. But people know, okay, well, it's not really forever. It's more like 2028 when they can't last, when their final largest $6 billion tranche of convertible notes come due. That's really the end date. And also, it also coincides with a likely transference of the control of the SEC. And that's when all these violations of marketing, these products may actually be enforced. 2028 is the drop dead date. MicroStrategy shares need to be high enough that they can sell it to unload their convertible notes while servicing all their dividends till then. And they need to be high enough so that they can have enough money to pay for lawyers and enough, I guess, sentiment goodwill. I don't know. 2028, it's 18 months away, the year itself, which is a long time and not a long time. And that's the game now. The game now is what happens between now and 2028. And everyone, including them, is betting now, after saying it was dead, on the 4-year cycle of Bitcoin. What about Bitcoin? Well, technically speaking, just keeping it simple, it has, from the low, the beginning of the cycle, it's already broken the 50%. It's already technically in what I call the valley of risk. That's where something breaks a major pullback, does not hold, and you begin to lose it. Now you don't know where the bottom is going to be, but you can start to kind of identify levels. Now, for the last couple of weeks, people probably said, oh, the weekly SMA. Yes, I do follow the weekly SMA, the 200 period SMA. It's quite effective, actually. And you can see why I began to hold it here, but this week, it hasn't validated it. This week's going to close unless, Saturday, Sunday, you get a pop above it. But price respected it, and then it didn't. It's going lower. Now, where is it going to go to? The thing I've been saying for years is this is all now in the hands of the ETF buyers. The ETF launched back in January of 2024. It launched at about, depending on the day, probably about 46. That's where the high was up there. I remember this very well. I remember debating people about it as well. Yeah, this is where you had the run up of the ETF launch. And then, of course, the sell the news. Sell the news was kind of interesting. Only came down a little bit. I thought it was going to be bigger. I was wrong. But it actually did launch us into the bull phase, or the bull market just continued as it was going to anyway. And so now what you have is you have a support level, a very clear volume profile level down at about 42. A lot of people are calling 50. A lot of people calling 50. And no, it's the answer to everything is 42. And that's going to be relative to the big old iShares Bitcoin Trust. That's going to be at that opening price. It's going to be $27.94 on IBIT, because that's when you're going to see what I have two senses that I'm blessed and cursed with: smell and foresight. If my dog pees, I know it, and I don't want to, but I do. And I don't like knowing that people were going to lose money on all these products with MicroStrategy and things like that. But I just knew. I knew because of the way they conducted themselves. I knew by looking at their actions and their words that they were bad traders and they were going to mess it up, even if they don't do it this time. But anyway, I have seen the headlines. I have seen the Twitter posts. Bitcoin ETF buyers now underwater. I've seen it for this whole entire phase because this is how markets work. It's not math. It's human sentiment, and they have to be tested. In other words, you have to see what happens when every single person that put this, every boomer buying Bitcoin that put this in their 401k or their IRA or their portfolio, what happens when they're now looking at a loss? What do they do? That always had to happen. It was just a matter of when. It's just how the market works. It was never going to be up only. The market seeks to test people, emotions, sentiment. And we'll see what happens when they get tested. And so we have to get there, basically, to test that. And then that could happen in October, just as everyone thinks that the bear cycle will end, and we'll see what happens. That could happen. Very well can happen in the next phases. That is the most likely thing to happen, I think. So, all right. While we're on the topic of crypto, my favorite XMR, Monero, continues to kind of hold the line. It holds its 100, well, I call it 89. I use the 90, 89. Yeah, just for my friends use it here, but it's holding it. The 89 EMA on the weekly still holds. And just to kind of do a little comparison, if we look at ETH, BTC, over the course of this year, not doing too well. If we look at Solana, BTC, if we look at it, of course, not doing too well. Litecoin, which I did try to play, but got out of it because I don't hold losers, also going down. But XMR, BTC is actually on the year up 7%. So just as I've been saying for years, if and when you have a bear market of Bitcoin, Monero will outperform just by holding its ground. Doesn't mean Monero's not down year to date. It's had quite a volatile year, actually, if you guys remember, early in the year, getting up to 800. But that's what it was always going to do. Monero is going to slowly appreciate while having little intermittent periods of eating. When someone goes to launder some Bitcoin, they got ill-gotten Bitcoin. That's what it is. But here's let's find just a second. I did a, let me find this. I have to admit though that the use case, where is it? I did it in see, yeah. I did a, why am I not being able to find? Okay, Grok sucks for searching your chat history. All right, 1 second, hang on. Oh, yeah, 1 second. Didn't want to reveal anything personal. Here we go. So I made this week. This is a look at the theme discussions when it comes to Bitcoin over the last 10 years, going back to 2015. So yeah, see if I can make this bigger. There we go. So the narratives being digital gold, inflation hedge, kind of one and the same, payments and currency usage, and privacy and darknet. Yeah, they've kind of fallen off, especially at least in the Bitcoin space. A lot of that market share has been captured by Monero. But let's just face it. I mean, that's never been a money-making thing. I mean, people's number go up was all hedged or based on the things that people were taking the most interest in, the things that would draw in all that investor capital that would pump their bags. Of course, the ETFs, those were a big component. Decentralization, another common theme, and Lightning Network. It's actually been kind of stable. So people still talk about it. Government strategic reserves, but the plurality of conversations about Bitcoin have unfortunately been centered around Michael Saylor and strategy in their products, and makes up the largest component of what people talk about on Twitter, good or bad. So kind of sucks for the starting principles, I think. I really do think that I don't think I'm alone in this. I think that Bitcoin would be better off without them. And I think that just as FTX marked bottom, I think that their collapse is not only likely, but perhaps necessary for Bitcoin to have another bull run without them. We'll see. We'll see. We'll look at your symbols here in just a second. I got one more thing to put in. Get your symbols in, guys, if you got things to look at. I'll go through them. SpaceX. Oh, I already got it up. So SpaceX is, for those that don't think that price action matters, or it's just math, look at the daily holds of the IPO share open, or I guess that you call it the market open, 150. It has stubbornly held that level, but it's also not coming off of it. Gut feeling, that's not good. It's trying to break that level. And but then here goes outside the math component. Here's in the sort of the wisdom, the gut check on it. The reason I still haven't bought it yet is the same reason that I haven't bought. I didn't buy it at the IPO. Well, there's a couple reasons. Number one, I don't buy IPOs because they're not made to get retail rich. If you happen to get rich buying an IPO, it's a happy accident. It's to make the original investors rich. The other is to look at Tesla. There's been so much like attempt, I'll say attempt because it obviously isn't working, to drive bullishness about Tesla in relation to SpaceX, talking about how he's going to buy it. In fact, now there's something come out saying that SpaceX or Tesla is going to purchase T-Mobile. There's all these news articles that are coming out about that you would perceive as good, but they aren't moving the stock up. And you got to remember this. This is how you tell if you're in a bull or bear market. When you have good news come out and the stock doesn't move, that's not good. In fact, that means you're in a bear cycle. The opposite is also true. If the stock is in a bull market, if a stock is in a bull trend and bad news comes out and it just stays flat or oftentimes goes up anyway, you're in a bull. So the only thing that matters is what phase you're in. But those data points, like a lot of people will, go to Twitter and they'll put rocket emojis on it. I mean, it's very common in the Bitcoin space. Whenever some good news comes out, or a lot of them actually been like 5-year-old, months-old videos they're posting now because it's so hard to find bullish engagement that's recent now. But they'll post that and they'll find some little thing over the last couple of weeks, months, and year that are bullish, and they'll rocket emoji it, and the market doesn't go up. And that in itself is ironically actually a data point, not the one they want to present of a bullish narrative. But really, if you have bullish news coming out and the stock or the crypto keeps going down, that tells you what you're in. That being said, Tesla's refusal to yeet in preparation, like what you would if SpaceX was going to go up forever, or let's just say go higher than it is right now, what would have happened prior to that is you would have seen the Elon brand be going up and breaking its all-time high on Tesla. That was what I was looking for, essentially, to know what was going to happen with this IPO, because that would have told you what is the market's appetite for Elon brand. That's what it is. It's Elon brand, basically. It's brand Elon. It's two stocks, same man, same brand. And no one was buying up Tesla. The bullishness was not there in Tesla. That told you what was going to happen here. And the same thing's happening now. I'm seeing all these news articles about things they're doing, and it's not making the stock go up. That's not good. It's not good. So I wait. But also in line with that, there was something today I was doing a little late research on. saw this article come through Zero Hedge about how right after the IPO they started doing bonds, issuing corporate bonds for SpaceX. Of course, you know, IPOs are just one funding source that corporations will go through, but doing corporate bonds, which either they just do a straight bond where they pay you later and pay you interest, or they convert into shares later. Either one, what they do. They also did bond offerings. So they're basically just trying to drive as much funding. And the bond, let's see, do we have, I know. Yeah, so this is this is going to be the price of the bond. Of course, with every bond, it's going to be typically at a 100 par. SpaceX is now at, I believe, if I'm reading this right, 6.65%. Maybe that's what it is. And the bond price is selling, or that is the interest rate that they offer on the bond, 6.65. So those bonds are now trading at 96. What that means in bond terms are, if you're not trading at 100, that means that they want more than the coupon rate, more than 6.65%. So the effective yield on this is probably, you know, maybe 7, something like that, math. But yeah, it's a 30-year bond. And of course, the risk-free rate, the 30-year yield, what is the 30-year yield right now? 30-year yield is 4.837. So that's what you get if you did a U.S. Treasury. That's quote unquote the risk-free rate for 30 years. So people want more than an extra 2% for the risk of SpaceX. Doesn't mean it's going down. It just means that they're not pricing it bullishly. They're not YOLOing into it. It's not a sign necessarily that it's going to collapse, but it tells you that the bid is not there. It tells you that the bullishness is not there. And lacking all price action, trying myself to make a decision. I will make a decision on SpaceX. I will promise you that at some point I will buy this. But lacking price action, looking at just what we see on the chart here about it coming to that and just not getting off of it, hammering that level, I think is going to break it. And then you're going to see what happens in a lot of IPO cases. I think another similar example that I found in our research was Rivian, which, you know, they did a big IPO. It's probably the price action on this is going to be probably one of the closer things to look at, because again, does that look familiar? Big old yeet. Big, 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 big. So the resemblance may be uncanny, but I mean, that's a pattern that we've seen before. And I'm not seeing the supplemental bullishness that's coming around. I want to own SpaceX, but it's not what you buy, it's how much you pay. And I think we're going to get it cheaper. So that's SpaceX analysis. What else is going on? Oh, wait a minute. We got to do that. We got to do this. I used to think it was a jinx to brag, but I think this is kind of cool. Hang on. So if you guys know one of the things, while I'm looking this up, Palantir hit the 50% this week. So it's done a nice, solid pullback and hold this week of the 50% at 107.56. That's good. That's good. That's good to take a shot at, actually, as opposed to all the times before. Actually, I need to hit a friend of mine up who, for this whole leg, was asking me, "Can I buy it? Can I buy it? Can I buy it?" I don't tell people what to do, but I was like, I'd be like, if you haven't already, there's your 50% pullback. So what I wait for an e-text. Honestly, let me not overcomplicate it. Let me overcomplicate it. What I really want to see is at least a 60% pullback, and that would take it to the 200 weekly SMA. That's being really conservative, though. But that could also happen because it's right there. I mean, in my head, tech stock, I think if it's a tech stock, if it's a high flying name, 60 to 70%. And that's what NVIDIA did in 2021. It was like a 69% pullback or something like that from its high. And so, hang on a second. The other thing that I want to, hold on. Depot. It's Home Depot. So Home Depot was another good example. Yeah, we'll look at now in a second. Was another great example, which, I mean, look, when everybody was trying to get me to buy AI late into the cycle, or asking me about it, it's very simple. I recently bought a house. I've been going to Home Depot a lot. They've been getting a lot of my money, so I have to admit I was kind of inclined to be very attuned to an opportunity to make my money back I've been giving them in their stock. And on earnings in May, they did a 30-minute spike. One of the key things I've looked for years. I have a whole website about it, charts.io, that tracks the 30 minutes of the S&P 500. And it happened right at, this is one of those perfect, it's perfect. It's a perfect setup. It was a perfect trade. Talked about it multiple times, posted in Discord, by the way, join, link below. These are the ones that come around only every so often, where it's a 50% level from all the way to the COVID low to the all-time high, pull back, gave you an earnings spike to that level. Chef's kiss, chef's kiss. Yeah, where is it? There we go. Yeah. So yeah, is it still good? I think so. This is my little celebration song this week. So, all right, that's enough of that. Things like this. This is the kind of stuff that I want. I want a company that is 16% up just the last month, less than a month. Yes, about a month, 60% a month. Not bad. Not bad at all. That's really been the only thing. I've been very cautious this year, honestly. There's Dell. There's other things from early on in the year, the stuff that did fly, but this is the most recent thing I bought in the last month. And the only thing that's really been interesting because it was such a good setup. And as you get into these summer months, it gets really hard. You really just kind of want to sit. You want to make all your money in quarter one, or make all your position, all your positions in quarter one. And then you want to take a kind of a soft approach as you get into, especially the summer months. For some reason, the market just kind of, I guess people go to the beach, people take vacations. It's nice out, but and then come back quarter one when the northern hemisphere gets cold, market tends to pick up again. And that's when you get more active. Unless you see something that you absolutely have to take, like a 30-minute spike on earnings on a 50% level on the weekly. So, but yeah, I mean, these are the kind of things that people should look for instead of, because who do you hear on Twitter talking about this? Nobody. It's not the stuff. You don't want to be buying the stuff there. So, Eli Lilly, one of my favorites. Again, 7% today. Wait, did they have earnings? No, it's just must have had some kind of Medicare GLP bridge. Who cares? I don't care about the news. All I cared about was that they got above the all-time high and pretty solidly got above it. They did have a false breakout here back in December for a pullback, which was a 50% pullback, a little small one. Again, 50%, also an EMA hit, but one of my favorites. Let's look at some of the others. Intel's it's volatile. I'm just going to hold on to this. I'm just going to wait, be right and sit tight. As I identified on the weekly a couple of weeks ago, Costco, by the way, this is the phase where we start looking at symbols. So if you got them, put them in the chat and we'll look at them. Costco definitely did a false breakout here on the weekly and it is going down. Not selling, but I hedged my position with a covered call. Kroger took a big hit. What's it doing? It's at a level. Okay. All right. Let's see. Where are we on the 50% here? We actually got below it, so that's not good, but we're hitting the 200 SMA. Do we have a volume profile from the prior trend to back it up? We do-ish. Hold on, let me go daily. Get a little higher resolution. Let's see what happens next week on Kroger. Kroger's now in the interesting territory in this pullback. But again, it's been a great stock. to own for years and years and years. And this is the kind of stuff that I like. Nvidia, can't not talk about Nvidia. It's fine. It's not the darling it was eating, but no reason to sell it. Waste management, another one of my favorites, hanging out, but winning for so long. Tesla, I still have a few hundred shares that are hedged with covered calls, making some income off of that. Haven't gotten out completely, but not as long as I was. Rollins is one of my long-term favorites, and I watched closely, but my gut, because of this week that just slammed through the 50% and volume profile, it's one of those things where if it hits the level, it should hold. And you kind of watch what behavior does at these levels. And if it doesn't, this is just a gut call in my case where I didn't go into it yet. But that doesn't mean that I'm not looking for it. In fact, more of a discount is good. But this thing for me for years has been up and to the right. What is it? It's Orkin pest control, essentially. And I used to work as a contractor for the company. That's why I found out about it years ago before they were even in the S&P 500. It's one of those you're always going to need it kind of things. Moat, I suppose. Palantir, we talked about this, hit the 50%. I think that's pretty good. Home Depot and Now. Okay, so Now I still have Now to reverse from I think about 92, let's say, or 90. And so I don't want it to come back, but it hasn't really invalidated that level yet. I sat through the whole up move because I'm just doing shares. I don't do options on it. And I'm content to let it sit for a second. If it goes below entry, if it goes below those lows from April, I have no problem cutting it either. So we're going to see what it does here. I'm still in Now. I'm still sitting in Now. And of course, SpaceX we're waiting on. So that's kind of the thing. And broadly, market speaking, it has been flirting with basically the middle of its consolidation here. This is just summer activity. There's nothing really that worries me about it, and there's nothing really that particularly makes me want to long it either. We're the end of June. We're literally around the longest days of the year. Peak summer is when I try to trade the least and take positions the least, because you're going to get chopped up, and that's what the market's doing. It's every summer. Just remember that every summer. But doesn't mean you go to sleep. In fact, I did some research years ago. I tend to want to pull it up, where I really looked at the whole sell in May and go away phenomenon, which, by the way, sell in May would have worked. Well, actually, it kind of went on until, it went on to the base of the bull market went on to like basically the last day of May, essentially June, and it dumped. The premise is sell in May and go away. In other words, enjoy your summer. Don't worry about the market. But it wasn't really come back Labor Day is kind of the extension. Sell in May, come back Labor Day. But it's actually found come back America Day. Actually coming back after July 4th. Maybe it's the exuberance of celebrating America's birthday. I don't know. That actually, when statistically speaking, the market actually turns back up from the May summer doldrum. That can be the earliest time that you're actually going to see the start of a rally, is right after July 4th. And that will be next week. And I'll probably do a stream next week. And I'll probably do another one. So yeah, that's going to come up next week. So basically the Monday coming out of July 4th, I'll probably I'll be a little more focused, actually, because statistically speaking, that is when oftentimes you get a little bit of a bump in the middle of the summer, but mostly towards the end. And then you have October, which is the scary month. Literally, it's both for Halloween and also historically some bad things that happen in October. All right, let's look through from SureDaddy's PCG, sorry. Pacific Gas and Electric. Is that? Yeah, that's that California. I didn't even know this publisher. Well, this is going to be utility. And the cyclicality of utilities doing well is going to happen when you're kind of into a bear market. It's hard for me to say because, I'm a pullback trader. I don't really see, I mean, it's bullish, A trend trader, pullback trader. It's hard for me to say. I can't. This is something where I don't have an opinion on because I don't see a major price structure opportunity here. What I would have done in the past. This is a hard stock to chart, actually. I can try. Yeah, it's just I can't have an opinion about this one. This is probably a dividend play. So you get about 20 cents. 20 cents. See, that's not. See, what's the dividend yield on that? PCG. They've just been so hammered by those fires over the last few years. Could be an opportunity, but 1.15% annual dividend yield. I mean, it's just at any point the state of California could just like take their money, couldn't it? I can't do anything with that. Sorry. Symbiotic coming up on a 200 SMA at 36.64. It's already broken the 50%. So technically it is in the valley of risk. Yeah. So came down, didn't hold it, tried it, didn't. So it's kind of risky. Actually, I hate it when people use that word. I mean, it is kind of low probability. You are in a volume profile level matching with some support there. So you can get a little kiss of the 200, or if the 200 estimated move up. I'm not against this. This is better time than before. If it was going to turn around, okay. So here's why I would look at this. Notice on the volume profile. Let's get wrist nice. Notice on the volume profile how histogram, how you have a very sharp decline and not much really. So most of this is where people weren't really trading. Okay. So you know where your stop needs to be. If you bought it here, basically you can stop out here. In other words, get in at 44.24, get out if it hits 34.53, and then you avoid the biggest pitfall, which is back holding, because it's not working. Because then your next volume profile level is going to be all the way down at 22.28. Maybe at 27. But see how there's no reason for you to take on this loss right here, as it will most likely do if it doesn't hold here. So I can see this as an opportunity, not particularly like strong. You don't have a lot of confidence here, but at least you know when you're wrong. And that's the most important thing, so that you know to get out, bag holding and destroying capital, which is what a lot of people that are just math have been doing. All right. Now let's do the horse portfolio. We looked at Bitcoin, SoFi. A lot of my friends are still trying to get me to get into it. We talked about this last week, but hey, it's again 1591. That's good. That's good. I like that 1591. Okay. I think from this point, I'm not always a breakout trader, but I would look here on the daily. It's starting to set up above the cloud here. If you can basically get a pop, I would take a breakout in the 19s, from the 19 to 20, because that's going to get your momentum out, and that's going to get you bullish, and that's going to tell you, okay, this thing has confirmed the hold of that key volume profile point of control, like the most powerful volume profile. And you know where your stop needs to be. Your stop can be below these lows. Okay, so you have to take on a little more risk than normal. Okay, like you got to go from 19 down to 14, so you need to size accordingly. I'm making a note. All right, I'll just set an alert. Set an alert there. Message. I like it. I like it a lot. It's good. It's good. Okay. Hymns. Your favorite. Good. I've been telling you for weeks. This is a whole, just be right and sit tight. Be right and sit tight. Don't worry about it. It's really nice when things are going up, isn't it? Because you just, it's like I'm talking about Home Depot today. Like you get in, it goes up from your entry. That's the best situation that can happen because you're immediately right. You don't have anything to worry about. Just leave it alone. Watch it. I mean, don't let it come back and don't forget about it, but just don't worry about it. So Hims is good. Hims is good. Zeta. Yeah, I don't like that. I got nothing here. It was this. Yeah. I mean, I don't know what this is, but it looks a lot like some of those off-brand AI things. I have small positions in NUAI and iRun. I don't know if that's what that is, but the charts look kind of similar. Well, they're kind of gross, and really it's just because friends were getting into it, so I kind of just copy traded them. I do that sometimes, small. And yeah, Hood is, so here's what's interesting. I like it. Look at that. That's a weekly wave pattern on Ichimoku. In other words, it never went out. I didn't buy it. I did not buy Hood. I think I might have missed out, but it's good. I like it. Let me take off Ichimoku's thing. So just redraw it. Redraw 50%. I think I didn't get it because it wasn't really being respectful of it, but hey, nothing's ever 100%. But this looks good. Ichimoku wave, the momentum never got out, so it is riding up that pullback to the weekly cloud. That is good. That's a hold of a trend, hold of a long-term trend, basically. And fundamentally, if I'm talking about fun, I think that Robinhood is absolutely in a better position when it comes to being a trading platform than Coinbase. Coinbase is actually, what's funny is I've actually seen that Coinbase is, people have, with much consternation, I learned that a friend of mine has a Coinbase account where they have their stocks. Coinbase has been historically, Coinbase has been the worst thing to happen to crypto. And I know that might seem kind of surprising, but really when it comes to the original crypto ethos, from that I got into it back in 2011, I would never touch Coinbase for what they have done to crypto, with giving up user data way early on before there were even laws that required them to report to the IRS. They basically ruined crypto for me. I'll say it, what I thought it was going to be, a true freedom, decentralized currency outside of government and corporate control. Instead, they came in and they took the approach, we're going to fully corporatize and regulate it and welcome regulation. And right now they're fighting with Congress people about, this clarity bill. And I say, tough titties. You asked to be regulated. You're like, please, daddy government, regulate me. And now they are. And now you're complaining about how they do it. F off. Yeah. Anyway, Coinbase, not even once. But Robinhood, which I thought they're more diversified, and they have some of the best margin rates. Actually, you pay $5 a month to get margin, and then it's like, I can't remember the last time I checked, but like Schwab is like 11-12% now, and they're still sitting at about 6% margin. That's really good. I like Hood. I do. Maybe I should chase this one. Crap. Oh well, it's good. You're good. And TLT, so they're going to raise rates 3 times this year, which is not going to help. However, it is not slow. It is not dying. I'm still sitting in my options. Got 6 months left. We'll see if we can get them back. But, the position is on with options. Tend to just leave them on with a fixed amount of risk. We'll see. We'll see. Was never going to be an exciting thing to own, basically. But it ain't going anywhere. All right. I think that's it. Thanks everybody for hanging out. Hope you had a good week and have a great weekend, and get ready to intensify your freedom for America Day. True wisely.